Back with ET now to the budget headquarters and dissecting the budget takeaways, and who better than Professor K.V. Subramanian, Executive Director at the International Monetary Fund, joining in right now to do exactly that. Professor Subramanian, great to have you on ET now today, and what a budget it turned out to be, and what a Saturday, right? Tell me, what were the key bullet points that stuck by with you from the budget this time?
Thank you very much for inviting me. Yeah, I've had a all-nighter here watching the budget, in Washington D.C. And I think there are a few aspects that are really worth mentioning. As I tweeted just after the budget, I did a quick analysis of the impact of the personal income tax rate cut on overall consumption and thereby on GDP. I think this is an aspect that is quite important. I think unlike, for instance, infrastructure, where the impact of that persists over many years, the impact of a personal income tax rate cut, which actually affects consumption, will be there for this year. But I think that impact is going to be large. And for the benefit of the viewers, I can sort of take the viewers through the calculations. Overall, the finance minister mentioned that there will be basically about a 1 lakh crore revenue that is foregone, and that is directly in the hands of the middle class. And middle class savings has been about around 18%. If you approximate it 20%, that means 80% of this will actually be spent. We economists use what is called the consumption multiplier, because this multiplier happens because when I spend, money reaches you, Tamanna, and from there to others actually, and that's how the sort of the chain proceeds. So the consumption multiplier is given by the reciprocal of the savings rate, and that's about 5. So we can expect overall increase in consumption to be about 5 lakh crores, and that's about 4.8% of the overall consumption in real terms, actually, if using the GDP numbers provided by the advanced estimates, and that's about 2.7% of GDP. So I think if we take, even if let's say around without this tax rate cut, let's say the consumption increase would have been about 5.5%. We're looking at about 10% increase in consumption. That will be something that will spur investment a lot, and I think can really help in the virtuous cycle. And I think there'll be an impact on GDP as well, because the GDP estimate has been 6.3% on the bottom, on the lower side. If you add that 2.7%, we are actually looking at 9%. Even if we allow for some overestimation, I think we can be, I can be very confident that we'll get a growth rate closer to 8%, definitely more than 7%, and that is certainly good news. Apart from that, I think there are a few other very important aspects. I think the National Manufacturing Mission, with a focus on clean tech, for instance, lithium-ion batteries, the solar PV cells, the electric vehicle components, the emphasis on nuclear energy, about 100 gigawatts through nuclear energy, the MSMEs, both through their basically expanding their the definition so that they can grow, and provisions for financing, the Atal Innovation missions actually for enhancing innovation, the national centers for skilling. All these are, I think, very, very useful. Also the deep tech startup ecosystem fund of funds. I think these are all, when you put it together with also what was announced in the July budget, the 1 lakh crore for innovation, and already the ANRF, which was announced when I was part of government, actually has been implemented. I think when you put it all together, India is actually investing a lot for the new ecosystem economy, actually focusing on innovation and entrepreneurship, and I think that is something that is very good news.
Professor Subramanian, I completely get your point about the cascading impact of an income tax cut, right, on the overall economy and the GDP as well, like you so nicely explained the math to us. But tell me, that on one hand, with not as much of a Capex outlay, was that the right tool to sort of give fillip to the consumption economy or the slowdown in the economy?
So I actually, that's a good question. I have checked, and I think we may need to verify this, but from my sense is that the Capex outlay has been kept at about 10.18 lakh crore, slightly more than the 10.1 lakh crore in the July budget. In my opinion, the main reason is that this year, I think the budget outlay for the capital expenditures has not been achieved, and my sense is maybe some of the constraints or capacity constraints in being able to utilize this budget outlay for capital expenditures. I think the government would be working on removing some of those constraints, because it is not very beneficial to actually increase the outlay without being able to spend it. That's the way I look at it. But I think even the 10.18 lakh crore for capex, I think, is not a small number, and I'll be very carefully watching what is being planned in the asset monetization pipeline. I think that is something that is good. It is of course not a 1 year thing. They're going to do it over the next over the next 4-5 years. I think that's something which is very good. So I don't see that overall, capex decreases significantly. There is no decrease for sure in the capex. There hasn't been an increase, but I think if you look at the actual spending numbers vis-a-vis, for FY25 vis-a-vis the budgeted, I think there might be still an increase. So that I don't think is a big worry in my opinion.
That's great. The other thing, that many people, Mr. Subramanian, since you gave me the cue that you're in Washington right now, so I have to ask you about it. People are saying it's really not about the budget. It's about the news flow that you're going to get tonight from the White House and Trump tariffs. Tell me, what's the charter all about? Is it really going to be implemented come tonight?
From the looks of it, that is what is happening here. Clearly, President Trump has started actually, playing like this, the first 6 overs in a T20 match, with, many executive orders, of which some of these tariff increases are part. And I think the ones on Canada and China are going to come into effect today. So I think, when you put it together with, what one saw during the Trump 1 administration, I think preparing for any potential headwinds that this may create by spurring consumption, I think is a good idea. Also, Tamanna, I think what we must take note of is, and I'll watch very carefully, is the new tax code that was announced. And I was part of the group that had drafted the draft tax code, and the report was submitted in 2019. I interestingly noted that the Honorable Finance Minister has mentioned that the number of sections is going to be reduced by half. Number of pages is also reduced by half. Which is similar to what we had achieved in that draft tax code. So I think if the complexity of tax law can be reduced, as a result of this, that will also be something that will be very, very important for small businesses, together with some of the measures that have been announced for MSMEs in the budget. I think those will help us prepare well for some of the headwinds that might come from some of these tariff measures by the Trump administration.
Right. Professor Subramanian, by the way, this is Aisha here. I met
Sorry.
you briefly at the India Economic Conclave last month. But anyway,
it's hard to make out from here,
That's okay. But tell me, when you talk about India, and this is something that you flagged off in your book as well, right? I think currency plays a very, very important role in the global economy that we are part of, and where we actually envisage India to be once we turn 100, right? Wanted to understand, what is it that you're making of the currency weakness which is currently at play? Because not just does it impact our exports, but that's also sort of leading to a mass exodus of FIIs and FPIs from even the equity markets, if you will.
So, there are two questions that you've asked here, Aisha. Of course, I think the currency movements, and second is about the FPI and FII sort of moving out. I'll come to that second part later, but I think on the currency movement, see, I think we have to understand a couple of things. One, currency depreciation actually is influenced, majorly by the difference in inflation between two currencies. And I think rather than getting emotive about this, what we have to understand is that if, for instance, if India has higher inflation than the United States, then the purchasing power of the rupee is actually declining at a faster rate compared to the dollar, and therefore the currency will have to adjust in nominal terms by depreciating, to keep the purchasing part, sort of broadly unchanged. And that is the conceptual part. So we shouldn't get, it is not really a reflection of the, of the quote unquote strength of the economy as such, which is how many people perceive it. Second, I think this is really critical to understand is that, even during this current period of the, dollar appreciating, and by the way, this is, this change has come because of the dollar appreciating. During this period, actually, the rupee has depreciated, much less compared to other currencies. If you look at whether it is the euro, whether it is the, British pound, and even previously during, if you look at during the Ukraine war period, actually at that time as well, the rupee had depreciated less. I think that is something very important to take note of, and this is because of the significant reduction in inflation. It's something that I've covered in the book India at 100, that the volatility in the rupee actually has decreased because pre 2016, when inflation targeting regime was not implemented in India used to face inflation on average about 7.5% and sometimes double digit inflation, especially if you will recall during the post the global financial crisis. But the decline from 7.5% to about 5% has actually made the rupee more stable, and this is an aspect that we must actually understand. Now, to the second part of your question on the on FIIs, I think here we have to understand that some of the FII money actually has come back into into the American markets because they're expecting the impact of deregulation, the impact of some of these tariff measures, etc., to actually drive returns in the US market, and that's why these institutional investors have really that's the way I would look at it. I don't think it actually is a reflection of anything relating to the overall fundamentals, because I think and I in fact will mention that the FIIs will have to come back, because in the next 2 decades there isn't going to be another market delivering as good returns as the Indian stock market.
From your lips to God's ears. But Professor Subramanian, the other thing also is in the very near term, and keeping a very myopic view sort of on the currency right now. Sure, it's not a color on how the shape of the economy is. It's purely, like you rightly said, a currency fluctuation, dollar strengthening, we are weakening. But what tools does the RBI have to try and arrest the rupee fall right now? Or do you think the better thing to do right now would be let it be in a free fall and let the market, sort of dynamics play their role and let the currency settle wherever it has to?
So first of all, Aisha, I don't like that term free fall, that you used in your question. As I explained, and when I was answering your previous question, I think compared to other currencies, clearly the rupee has done better. And my understanding is that the Reserve Bank of India has typically always focused on reducing the volatility of of the rupee rather than targeting a particular level, because as I was explaining earlier, the level actually is driven by economic fundamentals. And particularly, by the difference in inflation, which India's inflation actually, even at 5% on average, is higher than, the US inflation, even sort of on average, let's say 3%. Historically, US inflation has been about 2%, but, if you take into account last couple of years. So I think the central bank would continue to monitor the volatility of the movement, try and as much as possible smoothen the changes rather than target a level, because in and itself, I think level is driven by economic fundamentals, and no central bank really has the or should in fact try and actually create an artificial level for the currency. And I think those of us who actually have learned international finance will remember the Bank of England, how it actually was really put under a lot of pressure when they actually tried to target a particular level. So that is not advisable as well.
You think more than the budget, I think, or rather the bigger fillip would come in next week when RBI, gives its outcome on the 7th of Feb. And do you think a rate cut is a possibility right now?
I actually would think that a rate cut is quite important, because primarily for two reasons. This is something that I think our central bankers need to understand very well. Which is that, if you look at, and this is where India is different from the advanced economies, if you look at consumption, a large part of our consumption is not sensitive to interest rates. It's only sort of, for instance, durable goods like buying a two-wheeler or maybe a four-wheeler or a house. Only for those, Indian households, borrow. They don't borrow to consume, food or go on a vacation, as it is the case in the Western economies. And as a result, therefore, consumption is far less sensitive to interest rate movements, in India than in advanced economies. And this is something that the central bankers have to keep in mind. In contrast, investment is, almost one for one actually sensitive to interest rates, because just about every investment that is done by a corporate involves some borrowing. Therefore, when interest rates are hiked, actually the impact on consumption is not as much as the negative impact on investment. Given the fact that private investment has not been picking up, I would definitely therefore encourage the central bank to think very hard about an interest rate cut to spur private investment. I think the central bank cannot just keep saying that private investment is not picking up while having a very tight monetary policy. I think this is an aspect that really must be focused on, because if the virtuous cycle starting from private investment has to actually pick up, and I think now the government, with basically the cut in the personal income tax rate, has provided the impetus for consumption. This is really the right time for the Reserve Bank to actually play in partnership. So monetary policy should be in partnership with fiscal policy to really spur investment, and thereby the virtuous cycle for higher growth.
Since you talked about consumption, what I wanted to also understand is, the nature of consumption in India from the COVID lows has been pretty K-shaped, with a special focus on premiumization, if you will, it's the rural end of consumption which has actually been beleaguered. Now with this additional fillip and, the income tax adjustments that have been announced in the budget, do you see a more broad-based recovery where premium continues to hold up higher, but rural as well plays a catch-up?
So, Aisha, let me correct you on this. I think, your statement is actually not consistent with the data. If you look at the economic survey, and especially read even chapter 1, you will find that the overall increase in consumption, actually large part of that is because of rural consumption has held up well. And I think for instance, the survey that the economic survey quotes actually shows that over 80% of rural households actually report increased consumption this year. And I think as for the K-shaped recovery, I think that is basically something that is I find it disingenuous, only because in any year, whether it's a COVID induced year or a good year. The different parts of the economy always grow at different rates. If you were to point me a particular year where consumption, investment, all of them have grown at the same rate, I would take this statement back. But I think that is never the fact. And even within consumption, sometimes urban consumption moves faster, sometimes rural. So I think then to use this fact, which is always a fact for any economy, to say it's there was a K-shaped effect on because of COVID, I think is disingenuous and actually does not fit with the data. At the same time, let me also mention, I think the economic survey points out very well that the whether it's the trend for GDP or the trend for consumption or in manufacturing, industry, services, etc. All of these have actually almost recovered the trend from the pre-COVID trend. So I think when you put it all together, it is very clear that there has been a V-shaped recovery. Having been part of the the government, having endured these uncertainties at that point in time, and actually having predicted a V-shaped recovery, it gladdens my heart to actually have seen these recoveries that the economic survey today has pointed out.
Okay, thank you so much for your time, and you've given us a lot of food for thought as to how not just India at 100, but how India is going to actually absorb the budget and fire all guns blazing, hopefully.
Thank you very much, Aisha, and my apologies for
not
not
a problem at all. It happens to the best of us. Good speaking with you.
Far from here, from Washington DC, of course, all the more.